Hey everyone, Louis Porcelino, Man Over Market, and today is the 26th of August, and this is the morning call. Well, another 6,800 point range for the overnight. We're making new highs based on the durable goods numbers that came out better than expected. Uh, we're shooting for 1919 right now. Right here, there's bracket M and bracket L. This is where we started the decline. That's 1925 and went down to 1850 in the last hour of the day. There's the move from the last hour of the day. Overnight, now we've made a low of 1850 half. Okay, now no one seems to know why the market broke yesterday, and I told you yesterday that I really think that the market is going to be trading on both sides of the market, just for the fact that when you look at and when I put this together for you, this profile, these lines, these vertical lines to the right in the margins here, these maroon lines, show you how much volume is taking place at that price. Okay, and what we want is volume, right? So when you see the lower volume areas, these become attractors for prices, and it means that buyers and sellers will come together, and you'll get some consolidation at price, right? So this is still why this market had some weak fundamentals. We, in this area, when we went through here last year, the 1800s, and we put the low in, and this is the low from the other day, right? Here's the 1831, and let's go down to 1813, okay? So basically, there's no volume down in here. This doesn't go far enough back to give you the volume, but there's no volume in this area. All right, this is a great buying tail from the other day, but that means there was one-sided trading there. All the buying took place. So I'm expecting the market to trade on both sides of the market, and the better it does and it gets more volume, you'll get consensus between the buyers and the sellers, and that's what will happen for to get consensus for the market either to move up or move down based on that. So, here's a better picture, right? Here's a better picture. All right, so this is what we're losing. Here's a candlestick. Here's the low back in October, and all these markets just went kind of straight up, right? Now we're getting more trading down here, and you're going to get two-sided trading, all right? This is good for the market. We're building a base right here, all right, at 78% retracement from the all-time high down from October lows like right now, okay? Now, this may be where the base starts being built, right? But a base here and firms up and doesn't take this out, I can live with. We did a 78% rate 78%, 78.6% retracement. I can live with this, and you have a foundation to go back up in here. You think I'm crazy, but let's see what happens by the end of the year, okay? And what's really kind of telling me that this break right now is not the end of the world break, right? It's a correction. Look at gold today. Gold is down. Now, remember that my theory about gold, and I'll argue with anybody about it, it's a demand product. It doesn't have anything to do with supply and demand. It's a demand. So now, is gold going down because people are dumping gold because they need to raise capital to pay debts? All right, or that could be what's going on, right? But if gold really is a measure of what's going on and what the risk in the world and all what's going on with the Asian slowdown and so on, and it's become an epidemic of bad economies, I would expect gold to be going up. You wouldn't be dumping the gold. So I think that this is a sort of a tell-all sign that I think the market is nothing more than in a correction right now. So understand that. All right. Here's another thing. All right. Here's bonds. Bonds have been going steadily down from the scare of 161 up here. We're now at the 155 again. So this is telling you If we get a little bit of a, we may not get September, but if we recover by the end of the fourth quarter or midway fourth quarter, like November, and this market's in the end of October is starting to take this break back, expect the Fed to do a rate cut. All right, I'm still not pricing it in, but I'm telling you that not a rate cut, a rate hike. Okay, this means that we just took a blow, we got punched in the face, and the market bounced back. All right, so bonds have been going down. This is also telling me that the people don't believe that the world is melting. Okay, so those two things are important for me. All right, oil. Okay, oil is not it's not being driven by what's going on in the economy as far as well, it is worldwide as far as slowdown, but this is overproduction. All right, and you're seeing a lot of play in mergers and acquisitions. Excuse me, a lot of play in mergers and acquisitions. So you're seeing companies that are in play now because of where the price of oil is right now. So I still think that oil could slide back down to the $28 to $30, cause enough pain for more companies, and that'll be the end of it. So I think that that's something important. All right. As far as S&Ps are concerned today, we're looking at our value area high at 1941 and a quarter, point of control at 1933, the value area low at 1922 half. Okay. Our bull bear zone is way down there at 1182. Okay, 1182. Still expecting two-sided trade today. Two-sided trade. One of the things I'm going to be looking at is if you look at where this took off, right? We almost took it back now, right here. So from here, this is 1926 to 1924. This area here, this is the M, bracket M, where we made the break yesterday. We're almost taking the whole thing back from there. So, two-sided trade. You got to be careful. It's still a lot of news out there. All right, and understand that this market is being driven by the fact we need to get consolidation somewhere between the 50% and the 78%. I expect us to start getting. This will be our range, 74 down to 1881. Okay, all right. It's Louis Porcelino, Man Over Market. Stay with us on Twitter. All right. Right now, I've got all the sisters. Let me see what we got. We've got all the sisters in a buy. We got our 5-minute pivot in a buy. Here, I'll put this up here. I'm sorry. Should have put this up for you. We got our 5-minute pivot in a buy. Okay, and the 5-minute pivot is down at right here, 1898 half area. 1898 half. All right. Good luck trading. Stay with it. We'll talk to you later. Bye.